The consumer tech graveyard is littered with yesterday's darlings, but something is stirring beneath the wreckage.
It's been a tough few years, but the sector is truly reshaping how consumer businesses are built and scaled.
While investors fled to safer B2B bets, the consumer landscape was quietly transforming. The pain was real.
You've got peak D2C brands in COVID, which drove crazy valuations, pricing them like tech companies.
But beneath the wreckage, a new foundation was forming. The moment when artificial intelligence meets everyday consumer friction.
What captivates the imagination on the consumer AI stuff is just the kind of macro why now that it presents to really rethink existing consumer experiences and in fact open up entirely new consumer markets.
Smart money is recognizing a pattern. 4 specific battlegrounds where AI doesn't just improve, it obliterates the old way.
So just to summarize, what you're saying is that we've got fragmentation, opaque markets, complex services, supply-constrained services.
The results speak for themselves. When founders crack the code,
when we look at even some of the big outcomes, consumer-facing businesses, and it's just because they have that capacity to scale and grow very, very quickly when you get it right.
But here's the kicker. Once your AI knows you intimately, switching becomes unthinkable.
But still fundamentally, I think if you're building up a pattern where you feel like your AI assistant or agent knows you well, then the switching costs there are just going to be massive over time.
The question isn't whether AI will reshape consumer markets. It's whether you'll capture the upside or watch from the sidelines as others build the empires of tomorrow. Hear the complete playbook from Joe and Mike at True on this episode of the EUVC podcast.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with Ace Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, to another episode of the EUVC podcast. As you know, we're here to connect and champion the voices moving European venture ahead. And today we're joined by Joe Seager-Dupuy. I don't know if I pronounced that correctly.
Seager-Dupuy, yeah.
Was that beautiful?
Yeah, perfect. Yeah.
Thank you, Joe. And Mark Martin, that was easier. General partners at True, a London-based investment firm with nearly $1 billion under management, investing across venture, private equity, and public markets with deep sector focus on consumer and retail. As you all know, or maybe you don't, consumer is back, at least to some of us who love AI and can see the incredible leaps forward that is happening right now. It's been a tough few years, but the sector is truly reemerging as a hotbed for innovation. Household spending makes up 60% of OECD GDP, which means that there's more than $15 trillion in Europe alone. And we now are seeing AI reshaping how consumer businesses are built and scaled. Joe and Mike, today we are breaking down why the timing is right, where the biggest shifts are happening, and how they're bagging their next generation of standout consumers, founders across Europe. Gentlemen, did I do some bit of credit to everything we're going to talk about today?
Yeah, that was spot on. Yeah, thank you.
Beautiful. So to anyone thinking, could we have a bit more on True? We have done an episode solely on the True firm before. You can go and check that out on the Spotify playlist or Apple playlist, wherever you are. There's also, we've built a repository, a database of all the managers that we're interviewing here on the podcast, where we'll also have Mike and Joe featured with True. So definitely go and check that out. You can review all the materials there, which I think is super exciting. But today we're going to talk consumer. Gentlemen, first and foremost, for those that didn't listen to the other episode yet, what is it about consumer that's exciting right now?
Yeah, look, thanks, Andreas. Appreciate you having us on. I think maybe stepping back is useful to touch on something that you mentioned, in that it's been a tough few years for the consumer sector in general. And I think consumer has always been a bit harder from a venture perspective as well. I think people tend to dip in and dip out of it depending on the sentiment of what's going on in the broader macro environment and consumer confidence more broadly, which I think if you're not in it all the time, it can be quite tricky to build consistency and confidence and a really deep understanding of the market and what's going on. Specifically, I think the last few years has been just a crazy time more broadly, and a bit of a perfect storm for headwinds for consumer companies. You've got peak D2C brands in COVID, which drove crazy valuations, pricing them like tech companies. And obviously that was priced not unlike other sectors as well at the time, because everything was crazy with so much money coming into the market. But for consumer businesses, also created loads of unpredictability and demand for goods, everyone being at home and then suddenly not being at home through COVID lockdowns and things like that. And then I think secondly, you had digital acquisition for customers online exploding and not being helped by Apple making changes to user targeting and things like that. And also finally, I think sort of negative perceptions of the sector driven by macro challenges and sort of geopolitical uncertainty and things like that, just been super hard, and particularly for those companies fundraising. So it's been one of the very few categories which is probably down from a VC funding perspective if you maybe look back 5 years or something like that. But yeah, so your point is coming back. I think the emergence of AI is definitely driving a lot of that excitement and some hype as well. Just if you cast your mind back to, this is a couple of years ago, ChatGPT launching, that was probably the real trigger that brought AI to the mainstream for consumers, and things have really accelerated from there. We're seeing AI native companies being built across all categories. I think the developments of large language models, so LLMs, means that consumers are able to interact with digital products in a much more meaningful and natural way. So it's both changing the consumer behavior of how they interact with products, but also changing the way that founders are able to build products to kind of leverage that behavior. And they'll obviously will change depending on the product or the service, the occasion and everything. But being able to interact with your devices or software with either text or voice, generative AI being able to make companies provide these products and services in a much more effective way for consumers to interact with, I think is kind of pretty game changing. And so that's definitely been a huge driver of the resurgence in the market, definitely from a funding standpoint on the VC side, but also from an adoption standpoint for consumers getting excited about that.
I think just to add to that, when we take a step back, and Mike mentioned it there, I think the kind of narrative around consumer being hard is definitely true. And I think Forerunner put out some research that consumer startups were less likely to get to Series B than enterprise startups. So what's interesting is the ones that do are then much more likely to IPO and to IPO at valuations that are much larger than the enterprise players. So whilst there's probably a higher failure rate, I think the scale of the outcome on offer for getting it right in consumer is just fundamentally different ball game. And when we look at even some of the big outcomes out of the European venture ecosystem, whether it's Spotify or Revolut or Monzo, a lot of the outcomes have been consumer facing businesses, and it's just because they have that capacity to scale and grow very, very quickly when you get it right. And so I think it's maybe easier or it's safer at times to tend towards the mechanics of more well-trodden paths, or B2B SaaS, whatever it might be. And we do invest in those companies as well. But for us, the outlier potential in the consumer side is very alluring, and particularly because we spend all day, every day in consumer, feels very sort of addressable for us as well.
We've done episodes before on consumer. Everyone has discussed consumer in some way. There's a lot of material out there. So I think where we should dive really deep is specifically consumer AI, because as said, there's so many other sources to dive deep on the other stuff. Whereas I think that understanding how AI impacts consumer and whether there's something called consumer AI or it's just consumer and then there's AI underpinning it, I think is a moving target, and there's a lot happening right now. So if we did this episode 3 months ago, the answers might have been different from what they are today. So if I open with the very open question of what is interesting in consumer AI, where do you then go first?
Well, look, first, I think we should just say that, to your point, there's a lot of interesting stuff in consumer that's not necessarily AI related, or at least AI driven. We'll probably talk later on about some of the ways that consumer businesses are using AI to build more quickly and more efficiently. But I think what captivates the imagination on the consumer AI stuff is just the kind of macro why now that it presents to really rethink existing consumer experiences and in fact open up entirely new consumer markets. And I guess we always default back to, okay, what are the broken consumer experiences or the problems out there that can now be unlocked by leveraging the new technology? And so we think about, there's a few, right? So one would be anything where the user experience is super fragmented. So I'm sure you've had the experience of online shopping, for example, or planning a trip. You're across 20 different tabs in Chrome. You're trying to compare across different sources. Lots of wasted time, and the opportunity to deploy AI to front load some of that heavy lifting for you is super compelling. I think the second category would be where things are opaque, and almost the old business models were very much exploitative of search costs. So you think about differential pricing and different channels for the consumer. You could either spend loads and loads of time optimizing that you're getting the absolute best price at the absolute best time. And again, I think some of those tricks and tactics that are working against the consumer are going to fall away in an environment where we hopefully have AI agents enabling much more always-on shopping behavior for us. We also think a lot about areas where true personalization is meaningful and required. So for a long time, we've obviously had personalization as a theme, but often that's meant more sort of segmentation. So we're going to put you, Andreas, into a bucket of people that look a little bit like you. But I think what's different with AI is the ability to truly personalize down to the unit of one. I actually had this weekend this discussion with my wife, who's French, about me getting my French citizenship. We were using ChatGPT, right, to figure out specifically for our circumstance, how long we've been married, where we live, all of this sort of stuff. What's the best path for us? And that's just a fundamentally better user experience than trying to trawl through 10 different advice blogs and piece together what's the most interesting or relevant bit for me. I think similarly, we think a lot about areas where there's kind of lots of disciplines that are playing into an overall answer or an overall product that the consumer wants. And we spend a lot of time actually thinking about the opportunity in consumer health when it comes to AI. If you think about, something presenting itself as a symptom, you're not feeling well for whatever reason, there could be lots of different underlying causes for that, whether it's your nutrition, whether it's your lifestyle, whether it's your sleep, whether it's some kind of biological issue. And to date, the way that you've solved that is going to a GP who you're hoping has the ability to reach into those different pockets of expertise and synthesize something that's most relevant to you. It's something that, the software that can do that on your behalf and have expert level expertise on all of those different disciplines and then play a role in aggregating it up to you as the consumer is incredibly powerful. And I guess across the board, what the common thematic that we think is really unlocked is where you have markets that were historically quite constrained on the supply side by high cost human labor. So you think about things like medicine or law or tax advice, whatever it might be. If you're now creating an environment where through the use of software, you can effectively automate large swathes of that and bring the marginal cost to serve down, that also means you can bring the price point down to a much more compelling level to open up the long tail of markets that have historically been quite constrained in the preserve only of the wealthy. So we think the kind of opportunity to apply AI to fix some of these problems that are still inherent in everyday consumer lives it's extremely exciting time to be investing in companies that are doing that.
It's from an investment standpoint, so it's obviously exciting from a consumer standpoint for making the experience better, more personalized, more accessible. But just as an investor, you're potentially looking at parts of the market which are going to be much, much bigger than they have historically. You think about private wealth management as an example, which historically has only really been accessible by the top echelons of people with all the money, because it's a very people-oriented and heavy business that fundamentally takes a clip off someone's assets. And that's very hard for anyone to therefore, or for the average person to get access to good advice about how they should think about family planning, or their their different different parts of their tax returns they might need to think through. And so just the addressability of the market is immediately expanded when you can reduce the cost to serve because you're using software rather than big teams of people. So it's really exciting from an investor's standpoint as well to think how big those markets can get.
So just to summarize, what you're saying is that when you're thinking about consumer and looking at consumer AI, you're very much looking at the consumer journey, and you're seeing that we've got fragmentation, opaque markets, complex services, supply constrained services. Those are the places where you're seeing AI really unlocking a lot of potential and a lot of new use cases or company creation that's very interesting to look at. I think that's an interesting framework, especially for the journalists out there that are trying to figure out where should I maybe be keeping an eye a bit closer to consumer. These are 4 interesting areas. Then I'd love to ask you, what are the open questions and unknowns when it comes to understanding where consumer AI is moving and where to keep an open eye?
Yeah, as you can imagine, we think about this a lot as well and talk about it a lot. I think the first one for us is the kind of adoption, the path to adoption at scale and enduring adoption beyond some of the sort of more experimental use cases that we see people applying it for. And when we talk about this, we try and segment the world a little bit into assistants and AI agents. And crudely, the kind of assistant side of it is the AI software helping you as the user accomplish a task, which is effectively a supercharged, much richer search experience. And then on the agent side of the spectrum, that's transition towards AIs actually taking actions on behalf of users and acting with some degree of independence and autonomy. Those two ends of the spectrum, like there's quite a lot of distance between them and lots of overlap, but we find it helpful to kind of tease them apart when we're trying to think about what do you have to believe for the adoption to ramp up on each side. And I think on assistants, we've already seen pretty enormous adoption across whether it's ChatGPT or Perplexity. They're kind of, the horse is bolted, right? I can't remember the latest stats, but I think it's 300, 400 million active users for ChatGPT. It's pretty clear that those generic models are out there in the wild and being used. Mostly on the sort of more horizontal level, we haven't seen a huge amount yet of scaled consumer adoption of some of the more vertical specific tools, particularly in a kind of, as a standalone destination. What we are starting to see is, particularly in the retail side of what we do at True, a lot of people starting to incorporate next generation chatbots or assistants within existing e-commerce platforms. So I think Amazon has one called Rufus. I think Walmart has launched one called Sparky. We're seeing people that are doing it on a kind of B2B basis for smaller merchants. That very much feels like it's happening, but it's not yet driving a standalone destination for the consumer. It's more of an add-on into existing platforms, which we'll come on to. And as we said, that's kind of like very much, in some ways is more opinionated and better evolution of search, which is incredible. And, it's a fundamentally different experience. But I think one of the questions that we have is, because it's effectively a sustaining innovation for a lot of incumbents that own the distribution, does that create opportunities for massive standalone businesses? I think there's a question mark there. I think on the agent front, we're a little bit more healthily skeptical, but optimistic is how I describe it. Because I think whether you look at kind of OpenAI's Operator or Manus AI or what Microsoft are promising to do with Copilot, they look absolutely amazing in the demos. But at least from what we've seen so far, there doesn't seem to be that much at scale application of them in the real world for the actual consumer. And we think there's loads of reasons for that, both behavioral and technological, that will have to get figured out over time before we really see adoption ramping up. We actually recently wrote a blog post about some of the things that we think need to be unlocked for that to happen. And we listed a few things in there, but I think ultimately it boils down to one around the kind of data and context problem of how much information the AIs need about the specific task and the user to be able to execute those tasks well. I think, the classic utopian vision of just telling a computer to do your weekly groceries sounds great, but actually there's a lot of complexity in there to get it right. I think the second big barrier that we see is around more subjective judgment calls for the agents to make. And again, that's going to be partly solved by the data and the context problem. But for things that are a little bit more subject to opinion, it's going to be tough for a software to reliably make high quality calls on those things relative to something that's very objective. So the kind of, buy me a shirt for a podcast recording I'm doing that's going to make me look intelligent, that's a very subjective task. Whereas you say, buy me another iPhone charger, that's much more objective and easier to trust that an AI is going to execute that well. And I think that last point is probably the sort of the macro wrapper of all of this, as we think about the kind of the risk equation for the user in terms of using AI to perform a task. And we try to distill, we've sort of ripped off Scott Galloway's algebra of disincentive to try to define it as kind of effectively the probability of something going wrong times the severity of how bad it is if it goes wrong has to be less than the hassle of the user just doing it themselves. So either it means that the use cases are going to remain constrained to things where the downside risk of getting it wrong for the software is pretty low, or we're going to have to get to a point where the data and the context around the task is sufficient that there's trust that the AI can execute those things reliably and not effectively annoy the user. So that I think those when we think about, what do we have to believe for agents to really take off at scale and work, we see things that are maybe like more skinnier, simpler use cases, at least in the short term, being the things that are likely to sort of catch on sooner.
As investors, as venture investors, are we at a place where you're already investing in pure play agentic business model, so to say? Or are you still saying it's going to happen? We are investing where there's a use case, but we want to see that the business also functions without this big assumption that we'll get there with agentic precision.
Maybe just quickly to talk about one in our portfolio that is a good example of that. It's a company called Jitty that's using AI to rethink the property search experience. So a Rightmove challenger, effectively, that's AI native. I think when we think about the underwriting case for something like that, there is a lot of utility that Jitty can build in the short term that doesn't rely on this kind of agentic future. And we still believe it can be a big business and disruptive just because it's doing the core task, the core job to be done so much better in our view than the incumbents in the market. I think the real unlock in the long run is if you can think through more agentic capabilities of effectively having a software-led buy-side agent helping users navigate through the property market, which doesn't actually exist today, really, particularly in the UK. You have buy-side agents in the US, but not in the UK. Then to the earlier point we were talking about, that enables an entirely new market that hasn't existed before. So I think as ever with these things, it's managing the tension between the optimism in the long run, but also making sure that you've got tangible proof points along the way rather than just trying to crystal ball it from day one.
Definitely agree. I think the short answer to the question is we are investing in things which will fundamentally, we hope, will be fully agentic in the future. But I think depending on the product or service, it's very specific, I think, because, if you think about something like wealth management, we talked about briefly earlier, obviously convincing someone to automatically just invest in, all the stocks that they think you should put a certain proportion of your money in is probably not going to be something that a consumer is happy to do from day one, because I think that the consumer needs to build trust with software and AI over time. But I don't think it's black and white in that situation as to whether a product has zero utility if there's no agentic properties, to Joe's point, because you can have typically a wealth advisor, as an example, isn't necessarily saying, okay, I'm just going to go and do everything for you. It's going to say, hey, this is my advice and these are your options. Now you tell me what your preference is, so you kind of get the final say anyway. So I think there's a journey that the consumer will need to go on, and I think that journey is different depending on the product or service that is being sold. In general, we do see a world where there's full kind of agentic utility for certain products and services. The question is how much time that's going to take, and can someone build a product where there's utility in the interim to make sure that you're not fully reliant on that.
If we try and dissect this from the user experience and how the best founders move towards a fully agentic world, then how do you see founders slowly or rapidly move towards a fully agentic business slash model slash product? Here, my point being, the moonshot idea is that it'll be fully agentic. You know, you're not there today. How do you see founders building their way there today? Are there some principles that guide them? Are there some actions that they take? Something that you can see the best founders, those that are most successful in moving along that path to the moonshot idea becoming a reality, working better?
Not necessarily something that we see across the board, but I think in general, founders need to start building from day one what the kind of end product, what the end state of the technology needs to be. So I think from a technology perspective, you build the infrastructure in a way which can enable that agentic experience, because you don't know when that is going to be unlocked, like what the timing is going to be. But I think that the best founders build in optionality, like at the product level. So when it actually comes to the UX and the UI and the actual how consumers interact with the product, they build themselves optionality to make sure that is flexible. But you need to kind of have the competence both in your product and tech teams to navigate the AI landscape, because it's moving so quickly, and they need to build fast, because if those agentic experience, come much quicker than people might think, you kind of need to be ready for that as well. So I feel like people are building the infrastructure and their preparedness to turn that on if they need to, but making sure they have the flexibility to kind of have that one layer of, we're helping you in this decision rather than making the decisions for you, to make sure they're building trust with the consumer.
I saw a pretty interesting case study of this because I'm a big Superhuman user. I'm so happy about my emailing program. And then I saw the launch with Rahul announcing that now they're going fully agentic, almost like it'll be able to both sort your email, plus it'll be able to send some specific tasks or specific types of emails directly on to other parts of the team. So he displayed that if you have obviously someone who's applying for a job, he would have an automatic reply going to the applicant, and it will also automatically be forwarded to his head of recruiting. And then, they were describing it as this is being rolled out, and he was describing it as I already do it. So the founder led there by saying, I have it already. I'm working with it. I don't know if that's true or not. I'd love to hear your take on that. But what was interesting was also they rolled it out. It took 3 weeks or so before I even started to have the labeling, which is the first step towards having the agentic model applied. So they're announcing the rollout even before the first steps are being taken. And then, at least here in Europe. And then what was interesting was, I think I saw it 3 weeks ago or so. And then last week, I saw Google announce that now they have an agentic mailing system. So I'd love to ask the two of you, because all us VCs, people in this ecosystem, are very much in our emails all day long. So I think we're pretty aware of what's moving on this side.
I think there's probably a couple of points in there. I think one is probably around the velocity of announcements in general and how short the windows are between things that seem first of its kind and fundamentally unique, and then the sort of copycats 2 or 3 weeks later. It's got the same kind of pace and almost overwhelm to it that crypto did, I think, in the late 2010s, where almost every day there was just so much going on, it was impossible to stay on top of it. I think in this scenario, it's even worse, because unlike crypto, the use cases for the everyday consumer are so much more obvious. And so if you're a curious person, you're in tech or venture or startups or whatever, your proclivity is probably to try them all out, and then you end up signing up to a billion different services that you then immediately churn from. So, and I think part of that is driven by brand being so important in this chapter of AI and tech and innovation. Like, I think the PR ground game and the ability to make noise with releases is actually part of the long run defensibility if you're building the brand. I think on email specifically, I'd say I'm relatively old school in terms of my own practices, although I am glad that search has got good enough now that I don't have to be ashamed that I don't file all of my emails in folders. I think it's a good example for me where, if you go back to that kind of algebra I think the risk of getting that wrong, if it's taking like fully agentic control of your email inbox, for me is probably pretty high. We always talk about grappling with the information asymmetry in the venture capital space, and in some ways that's where the alpha comes from, is having a tight grip on what information gets shared where. So for me, I feel like it's a good example where the downside case probably doesn't warrant the trial for me personally, but the things that are more assistant, like in terms of the labeling and the teeing up of here's what I suggest you should do you want to actually action it, I think that could be very, very interesting. And in some ways, I think the role of founders is to push the limits on what consumers think they want, because we're notoriously bad at articulating what it is we want until we see it. And so I think whether that's Raoul at Superhuman or whoever it is in the founder side, they should be the ones that are almost at the most extreme end of the curve, and then let the user behavior and the data show whether they need to sort of push harder on that or roll back to something that's a bit more palatable for a mass market consumer.
I would love an outbox approval for my Agentic AI on email. Just like, here, go through them at the end of the day. Approved, just like when we're approving payments. That would be so incredible. Guys, I'd love to ask you about defensibility in this space. Where do you see that defensibility comes from in consumer AI?
Yeah, it's a good question. Again, obviously something that we think about all the time. And we touched upon it there. I think actually, ironically, brand seems to be increasing in terms of importance, particularly as you think about the large players in the space, whether it's the OpenAIs or the Anthropic. I think a lot of as you've seen, like increasing commoditization at the model level and the sort of noise around the DeepSeek announcement, a lot of the conversation, at least that I've heard, seems to have reoriented to the power of ChatGPT as a consumer-facing brand and the ability to kind of maintain market leadership because you were the first in the market and you're the most widely adopted. And I think in some ways, like we see it a lot, like brand is a bit of a lost art when it comes to building companies, because I think for several years in consumer space, the performance marketing, the measurability of the performance marketing and the dopamine hit of, it being very mechanical was quite easy to get comfort with. And brand maybe played a little bit of a backseat role. But I think now what's interesting is that the ability to build a brand that people resonate with is kind of coming back to the fore. And it's particularly ironic as it's such an extremely tech-heavy space. And, we would say self-promotionally, that's why it's helpful to have a consumer investor around the cap table who can help think through how to build consumer brands across different markets, different stages, different business models. The second one that we talk about a lot is whether there's kind of unique or proprietary data involved in the consumer experience, the way the consumer is interacting with the model. And I think that can be two flavors. It's either data that's unique, that's enabling fine-tuning of the models. So we've seen, for example, companies that are using transcripts of private therapy consultations to train models on for AI therapists. And that's quite interesting because it's obviously a unique data resource that those companies can use that's not available on the open internet. Or whether it's data that sits more at the personal user level. That's where it intersects with things like memory. Because again, as we think about the importance of building something that's super personalized to you, having a model that can recall all of the context from previous conversations and understand the relationships that are going on in your life, we think over time that's going to build real stickiness and defensibility, because the lift of having to translate all of that context and personal information into another model is going to be so inconvenient. There's such high switching costs that it's going to be a real high threshold. And things like MCP and other kind of data and context sharing protocols will help with that. But still fundamentally, I think if you're building up a pattern where you feel like your AI assistant or agent knows you well, then the switching costs there are just going to be massive over time.
The product should get better as well. So the more data that gets produced, the more data they have access to, the more they can feed into the model so that it learns and refines and optimizes the answers that it's giving to consumer. The more personalization people are getting and the better the actual product experience gets, which then obviously has this kind of flywheel effect. So it kind of makes the product even more essential to the consumer over time.
It's so funny. Literally this morning, when I started my ChatGPT up, I was so happy because it prompted me to connect my G Drive ChatGPT, because now it would finally interoperate fully. And now thinking about it, they should have paid me for that. We'll give you 2 months for free if you let us siphon off everything that's inside your D drive.
Presumably, the quid pro quo there, right, is that the product and the utility of the product becomes so much better for you that you're willing to give away more and more of your personal information. And in general, I think the product layer and the user experience layer still really matters. Like, I think when we were first seeing pictures, and whenever it was, early 23 or late 22, and the kind of classic derogatory term was that it's just a ChatGPT wrapper, blah, blah, blah. Actually, now I think a lot of the kind of the product, the UX, the workflow integration is part of the defensibility. And most of the things that we see now are effectively switching between different underlying models for different tasks. And they're kind of like an everything wrapper. And it's kind of ironic that it's gone from people saying, there's no defensibility in the app layer, it's all in the model. Why are you just building a wrapper around the model? To then fast forward 2 years, and it seems that there's now no defensibility in the model, and all of the value accrual is going to be in the app layer. So I think it shows how quickly narratives can move, and having a kind of point of view without getting too deafened by the noise is important. And then the last one that I think, again, is really interesting, and it's not different to before, right? Not everything, but a lot of the big outcomes in consumer have relied on network effects. So if you think about all of the big social winners, clearly the network effect and the utility that you have, the increasing utility from scale, is such a fundamental driver of helping these things be true breakouts. And I thought it was pretty telling that, I think it was last week, OpenAI is talking about launching a social network as part of its next plank of its strategy. And I don't know whether that was a response to Meta launching their own models or whatever it was, a bit of a spat between Sam Altman and Mark Zuckerberg. But I think it kind of underlines the point that if you can build in social elements or other areas of network effects into these businesses, then you have defensibility that's conferred by the user base rather than just the technology base. And actually, I think there was the company that Creandum invested in, Bordy, I think is quite an interesting example where they're using an AI product to effectively bootstrap a brand new network effect by hijacking the LinkedIn network. And that's a really interesting play, because if they can pull it off and get the density in that network, then it becomes quite powerful as a standalone product.
And thank you, Creandum, for helping another company leaving an unread message in my LinkedIn inbox. Because I signed up for it and I really wanted to try, but I never got around to actually playing with it. I did get the call though, and I think anyone interested in this space, if you haven't tried Bordy yet, I think it's an interesting experience that you sign up for something and then you're called up by an AI that asks you questions about your life and what you care about and these types of things, so as to be able to connect you to people it should be interesting for you. Maybe I should pick up that app after all. Mike, I'd love to ask you, just before we close, we haven't spoken at all about how AI changes the way consumer companies are built. Lovable, of course, comes to mind as one that is blowing us all away right now. I'd love for you to just tell us a bit about how you think about it.
I think fundamentally it kind of changes the pace of efficiency and execution for businesses. And like it's not just consumer companies, I would say, is probably an important point. We talked earlier about teams having AI competence and that being kind of table stakes really for talent in product and tech teams. Even if the end product isn't necessarily AI related, and that's both for, I think, B2B businesses as well as consumer companies. Even just looking at, stuff from Rahul or stuff from Toby at Shopify, publicly talking about, AI needs to be part of your learning and development as employees, basically. And we need to be using this stuff. And by the way, don't ask me for money or headcount unless there's a reason AI can't do it effectively. So, all companies are putting AI into the heart of how they run their businesses. And, it's reducing barriers to entry, increasing speed of getting to a V1 product and doing it in a much leaner way. So I think more broadly, it is kind of being embedded into how companies build and how companies operate to be faster and leaner. I guess specific to consumer companies, there's a few things that we're seeing. One is around speed of prototyping and testing. So particularly from sort of non-technical people, and you talked about Lovable and companies like Bolt helping here, where you can really just like iterate quickly and try and sort of get to that first sort of concept or wireframe or whatever it might be to get your business up and running. Something like digital twins, where for consumer research and people thinking about what products do I want to build for my customer base, and having synthetic data that people can basically question and sort of ramp up tests for product concepts is pretty interesting. Obviously, on the Gen AI side, tools helping to create content for branding and marketing and optimizing those over time. We're seeing lots of consumer businesses optimize those kind of products. Also automating parts of people's go-to-market, a small example, but, Joe was talking about earlier around paid acquisition and finding customers for products, having AI agents helping scale influencer marketing independently. We've seen a couple of companies trying to do that. So they're just a few examples. I'm sure there's many, many more, but I think ultimately it means that we should see more innovation as companies experiment more and move through development cycles at a higher velocity. And so we'll probably see a lot more failures as well, but definitely seeing, I think, founders embrace technology, and not only in building the actual end product for the consumer, but also in their kind of operations. And I think there's almost like this, there's that kind of lean AI leaderboard where people are talking about, how much as much revenue per employee as possible. And I think founders are wanting to show that they can kind of build a really lean business and that they can be really efficient and effective. And so we're definitely seeing founders kind of thinking that from day one, how can they utilize products on the market to get them from 0 to 1 more quickly.
Are you seeing adoption of use of AI being so significantly different in incumbent organizations to in startups? Do you personally think that we will likely see good, solid businesses being toppled purely because much, much more efficient players come in because they're born native AI in how they think and work? And I think the answer to this question is especially interesting from you guys because you're used to thinking about consumer adoption. And I think employee adoption looks a lot like consumer adoption. So that's why I ask you guys this question.
Often when we think about what consumer means, it feels like that definition is expanding to more bottom-up go-to-market motions on more B2B tooling. I think there's probably a very, very big difference in the number of employees that are using ChatGPT as a personal user, maybe even paying £20 or $20 a month or whatever it is to be able to use it as a personal user, versus people who are using AI tools that are fully integrated into an enterprise data stack or whatever it might be. And I think a lot of that is to do with the go-to-market pain of trying to sell top-down relative to the ability to sell directly to an end user who has very clear direct utility on day one. The adoption of employees within enterprises is probably much higher than the adoption of enterprises. And so I don't actually know. I think it'd be fascinating to see that stat. I think one thing that's always true is that the startup has more incentive to adopt the new thing because they're trying to overcome the sort of incumbents' unfair advantages, whether it's distribution or scale or whatever it might be. And over the fullness of time, you would expect that if these things are truly driving more efficient or better outcomes, then that ultimately leads to the disruptors.
When you're thinking about consumer adoption, there's so many blockers to consumer adopting anything. And in the end, we don't have to adopt anything. We just default to the old model or we don't buy. It's somewhat similar, though there is management pressure inside a large organization. But, oh man, I remember from the days of management how you fought to try and get employees to adopt smarter ways of working and thinking and so on. How do you think about this? Do you see that it's such a pain as a consumer startup to launch products into the market that will actually be adopted by not the early adopters, but the mainstream people, the broad population? that this is likely also going to be a huge problem inside large organizations? Or do you think, it'll come pretty quickly, people are ready?
I'm not sure to that specific question. I think overall, the way we try to think about it is obviously there's so much noise in AI in general. And we try and think quite carefully, like, what is the product they're building? Is there utility for the consumer? Is there value there? I don't know specifically, where things will shake out, but obviously there's a lot of companies who are growing revenue, very like AI consumer companies and also B2B kind of prosumer companies that are growing very quickly. And I think in a world where everyone's excited about AI, to your point with Bordy, lots of people are signing up for stuff and saying, oh yeah, I'll pay, $10 to try it for a month. But then I think the big question is how much utility does that specific product give the consumer? And is it going to be superseded by something next month very, very quickly? I think we'll obviously have to see how that all plays out, but we try and think very, very, very carefully about what the founder is looking to build in the long term, and does the consumer really need it, or would they benefit from it? So we try to think about that very clearly. I think the point around incumbents in general is always, I think, a question that investors ask ourselves is, can an incumbent do this versus is it really a place for a startup to play? And I think it's always true, and it's true for AI, is that big companies have so much going on that they're always distracted and on their sort of core business. And, you think about search as an example and thinking, well, no one can disrupt Google from a search perspective. But fundamentally, because these companies are so big, their business models are reliant on billions and billions of dollars, and it's difficult for them to disrupt themselves. So I don't necessarily think that just from an efficiency standpoint, startups are going to beat incumbents because they have AI tools that are going to make them faster and cheaper. But I do think it's another reason why startups are able to disrupt and are able to win, because big companies struggle to move quickly until there's a break point and until they need to be really drastic to actually keep existing. So I do think it, as with normal software, it's the reason why startups can penetrate different markets where incumbents play. But I don't think it necessarily means that just because of efficiency, it means incumbents, will die necessarily because they're not being as efficient.
Gentlemen, thank you so much for joining me for another episode of the EUVC podcast. We did not end up concluding that all incumbents will die. Maybe next time. Thank you so much, Mike and Joe. Thank you so much.
Thanks.
Thanks, Andreas.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with Ace Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.